Okay, welcome to my LinkedIn Live show, Noel Christopher with SFR Talk with Noel Christopher. So I had a guest today that was Avi Golhar. That is one of my favorite people. That we had a miscommunication on the time. So you've got me, no guests, just me. If anybody would like to become a guest on my show, please contact me and you can be a guest. So the purpose of the show is to talk about the single family rental space, talk about housing news, and talk about investing in single families and just generally what's going on in the world. So, Avi and I were going to talk a lot about some of the new news or newer news that's come out about housing starts. And it's something that gets misconstrued and misinterpreted all the time. So I'm just going to jump right into that. This will be a little bit of a shorter show than normal since I don't have a guest. A little disaster, but I wanted to keep this time and I wanted to keep this consistent. So if anybody has any questions, any suggestions, anything like that, just please let me know. But a lot of news will be coming out about housing starts or new home sales. Let's talk it that way. New home sales are down from what they projected. And that's something really important to think about. And a lot of that, if you talk so there's a journalist named John Toby who writes some great articles on the housing market. I'm trying to get John to come on my show. So John, if you're watching this, you should come on the show and talk about this because we talk about these new home sales, and there's a couple of different things that happen here. A lot of them are seasonally adjusted, which can confuse things, and a lot of them are projections. So they project what they're going to be. They come out under estimates. It's kind of like taking the philosophy of earnings of companies and putting that to sales, to home sales, and saying, well, we think they're going to be this number. They've come under projections, so oh my God, it's terrible. And this happened most recently with the new home sales. The funny thing is that new home sales are up from where they were last year. I'm going to pull up a chart, and it's very telling, this chart here. And what it is, it's the new home sale where we're at. So if you take a look at the last few years, look all the way back to 2013, and this is by quarter. It's better to do it by quarter because you get away from that seasonality and month over month, which can show a dip. And so if you're looking here and you're looking at 2013, 2012, 2014, a little bit of a dip from 2013 to 2014. I think there's some things with some tax credits and things like that. Then 2015, you see that they've gone up every year. And again, in 2019, compared to last year, first quarter, second quarter, new home sales have actually gone up. This is a positive sign for the housing market. Just because they're under projections doesn't mean that there isn't some positive signs there. So that's something I really wanted to point out. And I want people to really think about this when they are reading the headlines and they're talking about these projections. And these numbers are after they've been adjusted. So they've been adjusted for the actual numbers, not for what they project or what they think they're going to be. So just something interesting I wanted to point out there. A lot of people get this stuff wrong. So it's just something to think about. As well, I want to kind of talk about a few things that is also going on in the housing market. I'm talking about affordability. And there's been a lot of talk about how medium home prices are at record highs. So the median home price for June was the highest level ever at $285,000. That's a 4.3% increase from the same month last year. And it's interesting when you use the median home price. That means that you're right in the middle. Half the homes are worth more, half the homes are worth less. But you really start to get into markets and you start talking about in Cleveland, the median home price is $145,000. We're in San Diego, it's $575,000. The lowest is in Youngstown, Ohio, is $92,000. and the highest median price is in San Jose, California at 1.125. Point is that it's all over the place, and it's hard to look at nationwide numbers. You really should look at your local markets to understand your median home prices. And that's always another interesting metric to understand as well. So it's all really interesting stuff. The housing market's still staying strong. Yes, there are still issues with affordability. There's record student loan debt. There is a lot of the builders are still building some of the lesser affordable houses. There's still issues with building houses. There's still issues getting permits and use taxes and labor and materials, and all of those things are going to affect the housing market. But again, I've talked to some of the largest home builders in the country, and they are building as many homes as they possibly can. So that's just an interesting dynamic. And in what I'm doing with the single family rental space is that we're working with investors. We're working with investors of all different types, and we're trying to figure out how we can get in front of more investors to teach them and educate them about, we call it educating and enabling about single family rental investing. And it's really important, for investors to understand that there are still, or potential investors to understand, there's still great markets to invest in. There are still great markets all around the country to invest in. Just because the market you live in is unaffordable, or you hear about affordability issues, doesn't mean that there's still not investment properties that are worthwhile to invest in. So that's something that we've been really focused on. I try not to do, when I do these shows, to talk too much about our company and what we're doing. But this show, I'm going to talk a little bit more about that because I don't have a guest. I'm going to talk a little bit more about the single family rental space. When I talk about the single family rental space, I also include 1 to 4 unit buildings, because that'll help group in the urban areas where you have a lot of people living in a 4 unit building. That's 4 units, or 3 unit, or a 2 unit building. I include that as residential real estate. If you include those, there are about 23 million rentals that are in that 1 to 4 unit space. About 17 million are in single family, and then the rest are in that 1 to 4 unit. And that's a lot of housing stock. And for example, a company like ours, we manage about 22,000 homes, and we're one of, if not the largest third-party manager of single family homes, of residential property, not including multifamily, obviously. So that's how fractured the space is, and that's why we're so passionate about what we're doing, is that there is not a place for investors to go to find investment properties that is efficient without a lot of friction. And most investors need to go talk to a realtor, and that realtor needs they might or might not know about investing. Some people go to turnkey providers, and I actually just recorded a really funny video about turnkey investing that, I don't like to use the term turnkey. We try to make the process as turnkey as possible, but it's not. You still have to make decisions daily on a property. And so the point is that it's a very fractured space. There's a ton of opportunity, and that's something that we're trying to capture. And we've created a marketplace along with a few other companies, and we're all going after the same space on how do we start servicing the smaller investors. So I'm curious if anybody that's watching has questions and things like that, to feel free to ask. But how do we service those small investors? And what we came up with was building a marketplace for a buyer to go to buy an investment property, for a seller to go and sell his investment property without having to vacate the property as far as a tenant and then sell it as an owner-occupied property. In the past, most of the time you go to a realtor and you want to sell a property, they'll tell you, well, when's the lease up? Let's sell it. We're going to fix it up. We're going to put some money into it. Well, that's not thinking about the 1 million single-family investment property sales that happen every year, and most of those are tenanted assets. And so it's really important to understand the marketplace we're dealing with, and how it's so underserved and it's so large. I don't know if I have the graphic to pull up because I was a little bit unprepared here, but the single-family rental space is one of the largest asset classes of real estate there is. It's larger than multifamily. It's larger than apartment buildings. It's larger than shopping centers and offices and self-storage and all of those things. And it's very underserved. And as the prop tech space is being disrupted and there's more money coming into that space, it's causing a lot more eyeballs on the space, and there's a lot of interest. And so what we're seeing is that, back in 2012, there were the institutional investors got into the space. There was the bottom of the market. They started buying investment homes, renting them out, and that really kind of put the floor in the market in about of the 13 top markets around the country, and really started the single family rental space being institutionalized. And so what's happened is now there's debt that you can get easily. There's portfolio lenders where there weren't before. I have some theories on why a lot of people don't own more than 5 or 6 homes, is because before you had to get Fannie Mae lending in order to buy an investment property, and you're limited at 8 homes. Well, even to get up to 8 was almost impossible. So let's talk about these 17 or even the 23 million investment properties. 90% of those are owned by people who own less than 10. 50% are owned by people who own 1. 80% are people who own less than 5. It's a very fractured space. So now that there's more liquidity into the market, and having marketplaces like what we have creates more liquidity. If you have a place that you can go and sell your investment property very easily, and you have a place to go buy investment properties, it creates that more of that liquidity, and it makes it a lot easier for investors to enter into the space. And that is just on the small investment side. We're seeing a ton of mid-size investors and multifamily investors coming into this space. And that's where it leads into the build for rent and selling stabilized portfolios is something that we're doing as well. And in a minute here at the very end, I'll show a little bit on our website, so I'm not too much shameless plug, but not mid-cap, but mid-size investors are actually coming into the space with a lot of capital. There is much more technology where you can actually own and operate investment properties in multiple markets without having to have scale. For example, 3, 4, 5 years ago, if an investor wanted to get into a new market, they would have to create scale. They would have to buy, they'd have to own maybe 100 or 200 homes within a market, or even more sometimes. Now with national property management companies like ourselves and technology where you can remotely manage properties much easier, now these investors, instead of going in the top 15 markets, are now going in the top 100 markets. And they're aggressively buying in some of these lower cost markets that have great yields, creating a professional brand and professional property management behind this, so that the tenant, the customer, gets a professional service from start to finish. They don't have a fly-by-night landlord that might decide to sell their house out from underneath them and then sell it to an owner-occupied buyer. I've been in that situation before, and it's very distressing. You can, rent a house long-term that gives you the mobility that you need for your job in the future. It gives you that stability. And there's a lot of now renters who are, instead of owning, are renting, and they might then invest into investment properties. I'll talk about that in a second as well. So it's really interesting how the space is evolving and being institutionalized, and we're seeing a lot of these investors going into these ancillary markets. I personally have investors that are looking to buy investment properties in the top 100 markets within 1 hour's drive of those markets. They will buy 1 or 100 or 500 homes in those markets, and they don't need to have that scale in order to efficiently operate. They're creating that scale through the technology and the operational efficiencies they have overall, or using a company like ours, which, when you work with our company on the property management side, you have the scale of a company that owns 22,000 homes. So you don't need that operational scale within a market. And it's just all very, very interesting stuff. And yeah, I appreciate it, Daniel and AJ, for giving some shout outs on my on LinkedIn here. So these investors are, what we're having the challenge with is trying to find or identifying a lot of the smaller investors within a market that own these portfolios that are from 10 to 250 homes. And we're, I'd be interested if anybody's watching this, if they have suggestions of getting in front of those investors. It's really kind of a ground game. And so we want to get in front of these investors because we have other investors that would like to buy their portfolios, and they don't realize at this point that you can sell a stabilized portfolio, that you can sell a home or a portfolio of homes without vacating them. You can get fair market value, and what's fair market value? Fair market value is somewhere between a 6 and an 8% cap rate that you sell the home based off of, and a lot of investors we talk to are a little bit gun shy because they think that we're going to come in and give them a lowball offer for their portfolio, and it's in a distressed situation. That's not what it is at all. You have portfolios now trading at fair market value, that's creating more liquidity in the marketplace, that's creating more aggressiveness from buyers. And there's a lot of these buyers have the cost of capital is very inexpensive, and so they can be aggressive when they're buying portfolios. And so we're looking all over the country. So sort of throw that out there. And so that's why we created our new brand of our company that went from being a property management company in 41 markets to a full service investment services company. And I, people ask me what I do all the time. I'll tell them I work for a real estate advisory company because that's what we do. We're a real estate advisory company that focuses on the single family rental space. And it's really interesting, the demand for our services. And so I'm going to pull up here the screen share of, for example, something that I'm doing here with myself. And see if I can do this. So bear with me. But we're really focusing on the investment space. And let's get this to work. And we're seeing, we created our new website. And let's see here. All right. Okay. Let's see if I can get it to work. But there we go. So this is, for example, a portfolio that I'm selling in Minneapolis. And this is an investor that this portfolio is approximately 240 doors and 156 properties. And we're selling this at about $31 million. And that is at a six cap or a 6 yield. And with a gross yield of about 10%. The price is going to come in there, come between somewhere in there. But that's 95 single family homes, 57 2 flats, 1 3 flat, and 7 4 flats. An investor can come in a property like this and get a 6% return on $31 million is very impressive. And it's going to sell somewhere around that 6 to 6.5%. There's financing available you can get for these. And on our site, there's a full calculator. You can see how to calculate your return on the investment and on the portfolio. You can see your cash flow. You can see, on this one, on a cash flow, you're cash flowing about $1.8 million a year. If these are fully rehabbed homes that are not going to need anything beyond your basic maintenance and turns when you turn the house. And this investor built these up over the years, bought these individually one at a time, rehabbed them, and have built a great portfolio. They would prefer to sell these all at once, but they could break them up if they could have 2 transactions. So it's just another example of something interesting that we're doing. There's all kinds of stuff on our site where you can see where the houses are located. You can scroll down and see the individual homes. We'll be adding some more pictures, some inspections. reports about these, but this is an example of what you can buy on a larger scale. Now you can get into smaller portfolios that we sell as well. We also are selling some build for rent from some of the largest home builders in the country, and we'll be soon getting into selling even full build for rent communities. So it's just all real interesting stuff. Then, on our new site, we have just recently pulled in the MLS. So let's look in the market that I'm in, Denver, Colorado. I'm actually in Steamboat Springs, but Denver. So we've done something that's very unique, is we pulled in all of the MLS listings for the entire market. You can now search based off of price, beds, ROI. You can also pull in your bed baths, your yield built, your zip codes, financials. You can do a net yield. So for example, let's look at a minimum 6% net yield. And there you are. There's all your properties that pull in a 6% net yield. And so, for example, here's a condo. Got all the interior pictures. This actually looks like a great investment. So this is a 7% net yield, average rent of, or monthly rent as $1,500, cash flow of $11,000 a year. Now, a couple of caveats to this. This is pulling in some AVN numbers, so you want to be careful and verify your monthly rent. This property looks like it doesn't need too much rehab. You could buy a property for $169,000, which is going to give you a cash on cash, if you paid all cash, of 7%, which is a great investment. Now you can go in here and start talking about doing a mortgage amount, doing a down payment. Let's say you put down 20% down payment. That's going to start to give you some different, because it's not that much money down, so your cash on cash return is not that great. But as you put down, let's say you put down 50%, you're still getting a 2% or 6.2% cash on cash, and net yield is 7%, and then you only had to put down half of the money. The point is that there's a lot of different ways to evaluate investment properties, and then we get back onto ROI. So the ROI really goes into what the property will, take in home price appreciation, your annual rent increases, and your annual expense increases. Denver's been going up pretty heavy, about 6%. Let's say you just keep that at what, a really, really super conservative of 3%. You're still getting a great return on a property. So point is, it's some very interesting things you can do on our site, and really take a look at different types of investment properties. So I think that's it for today. I'm going to keep this show pretty short, since I didn't have a guest. And one of the last things I want to talk about is how the space is continuing to evolve. And one of our goals is to allow investors to invest in any market in the country and have the have the confidence that they can buy anywhere they want to buy. And it's something that I truly believe in, and it's something that has been a passion of mine for a really long time. An interesting story with all of this is that back when I was living in Chicago and buying homes for one of the largest hedge funds in the world, we were buying all kinds of properties all over the Colorado and the Midwest, and I always wanted to figure out how to build a national advisory company that you could buy properties all over the country. And I spent a lot of money trying to figure this out at one point, lost a lot of money. and this was about 5 years ago, on building a model that you could underwrite and buy homes. And it wasn't viable at the time, and now it is. And so it's kind of a dream come true. And if you talk to Greg Rand, our chief strategy officer, who was the CEO of Own America when we acquired Own America, it was the same thing. We both have this vision of creating a place where you can go, a marketplace where you can go and you can evaluate properties all over the country. You can evaluate MLS properties, which is kind of a lost art these days, because a lot of people assume anything on the MLS is not a good deal. It's not necessarily true. And now you've got this national, platform where you can go and buy and find investment properties. And there's a couple out there. Roofstock's another company, one of our competitors, where you can go out there and they have properties on their site. They're a little bit different model than we do. What's interesting about what we have is we have boots on the ground in each market. So just interesting stuff. And, I made a decision a long time ago to dive into the space and become an expert. And I've spent a lot of time in my career doing this, and it's what I'm very passionate about. And it's part of like having that growth mindset of that. If you put your mind to something, you're going to be able to achieve it. And that's the same thing with real estate investing. So I'll leave it with that. And I appreciate everyone who's watching. It's always hard to tell on these shows how many people are watching, and I really appreciate it. And I kind of did this solo, which was a little nerve-wracking, to be honest. But look forward to more shows from us, putting out more content. Please go to my LinkedIn website. It's linkedin.com, Noel Christopher. And I try to put out a lot of content. I'm trying to put out some different types of content. I'm going to have a couple of videos coming out that are a little bit tongue-in-cheek, but it really talks about the turnkey investing space and the different ways you can invest and what you have to be careful for. I also write articles for Forbes and do a ton of other podcasts with other people, with a lot of other people. And so the LinkedIn Live is a whole new thing, and it's exciting and fun. And I really appreciate Social Live for helping make this all possible. And of course, Ritter's Warehouse, who's my employer. And that's it. So I'll see everybody later. Thanks a lot.